Kia ora, welcome to Shared Lunch, brought to you by Sharesies with BusinessDesk. My name's Frances Cook. I'm the investments editor at BusinessDesk. Today on the program, we're joined by Daniel Wu, senior analyst at Milford Asset Management, based in Sydney. Daniel's with us to talk about Meta, the owner of Facebook, WhatsApp, and Instagram. It's part of the Magnificent Seven, which is a group of tech companies that have had huge gains on US share markets in recent times. So in this conversation, we'll look at developments following the company's quarterly earnings result in April and where it's headed as AI takes center stage. But before we get started, here's some important information. Investing involves risk. You might lose the money you start with. We recommend talking to a licensed financial advisor. We also recommend reading product disclosure documents before deciding to invest. Everything you're about to see and hear is current at the time of recording. Welcome back, Daniel. Now, the last time we had you on the show, we talked about Apple, another member of the Magnificent Seven, and since then, honestly, these stocks, they just keep hitting huge new highs. So let's start with an overview of where does Meta actually sit in the tech giant space?
Yeah, thanks, Francis, and glad to be back to talk about Meta. Meta is the, I guess you could call it the smallest of the trillion-dollar market cap businesses at only 1.1 trillion. And they are also the cheapest in terms of the multiple that it trades on. So it's currently trading on 21 times 12-month forward multiple of earnings. And if you compare that to the S&P 500 index, which is trading at 20.5 times, a business like Meta, which is delivering tremendous growth and revenue growth, earnings growth, and has tremendous sort of investment opportunities going forward, it's basically trading at the same price as the market is trading. So that's sort of setting the scene for Meta.
I love when we're in this tech giant space. 1.1 trillion means you're small. It is all relevant, isn't it? When we say tech giants, we really mean giants.
Yeah, these are absolutely enormous companies.
Yeah. Okay. So when we're looking at Meta, what are the main parts of its business? And I think a lot of people think Meta, they think Facebook. So how much of it is Facebook versus the other platforms that it has?
Yeah, so Meta basically reports two segments. They've got what's called the family of apps, and then they've got Reality Labs. So for family of apps, that basically includes pretty much all of Meta's consumer applications. So you've got Facebook in there, you've got Instagram, you've got Messenger, WhatsApp, Threads, and some of the smaller ones as well. And that is basically 98% of Meta's total revenues, and substantially all of those revenues are from advertising. So Meta is very much an advertising business. So within the family of apps, we don't actually get a breakdown of how much revenue is generated by each of the apps, but we believe that Facebook is still the largest contributor to revenue, followed by Instagram, and then Messenger, WhatsApp, and Threads are still much earlier in their sort of monetization stages. Now, if we look at the other segment, which is Reality Labs, so this is basically Meta's sort of metaverse-related segment. It does about $2 billion of revenue, and that's mainly from hardware sales of the MetaQuest VR headset and also the Meta Ray-Ban AI glasses. But there's quite a significant amount of operating costs associated with that business. Basically, all of the sort of what Zuckerberg calls sort of the fundamental, the hard research into both the hardware side of things and also into operating systems and into AI even kind of sit within that segment. So even though that segment only generates sort of $2 billion of revenues, last year it posted a $16 billion operating loss, and that's expected to increase further this year as Meta continues to ramp up investments in both AI and the metaverse.
So if they're currently sinking a lot of money into that area, I mean, are there any thoughts that it's going to be worth it in the near future?
Yeah, that's a great question, Francis. I think one that a lot of investors grapple with. We sort of saw back in 2022 when Meta's share price sold off from, I think it was over 300 down to a low of about $90. And that was in part driven by, some of the top line challenges that Meta faced, but also by, some of the top line challenges that Meta faced, but also by Mark Zuckerberg's decision to, go ahead and invest tens of billions of dollars into the metaverse, which at the time was, the hot new thing, and has since sort of died down a little bit. But of course, Mark, after having a very good run over the last year, has sort of come back and said that we're going to continue ramping up investments in sort of both AI and, tangentially into the metaverse as well. Now, the question of whether, they're going to earn a return on that, it's a little bit tough as investors to sort of really gauge. I think to think about sort of the AI investments, you kind of have to take a bit of a step back and think about, how are companies going to sort of monetize these billion-dollar investments that they're making. You've got several different options, right? Firstly, is you try to sell that product, which is essentially what, say, Microsoft or Amazon are doing, whereby, Microsoft, by partnering with OpenAI, they say, well, we are a hyperscaler, we provide public cloud, we'll put all these models onto our cloud, and then, customers will come and use our cloud, use those AI models, and we'll get paid. But that involves you, going out and selling that product. And then enterprises, of course, they can put AI into their products, and then maybe they can charge an additional fee for that. But again, you have to go out and sell that. And if everyone's doing it, then it's hard to see how anyone can charge more for something that is now sort of table stakes. For Meta and Google, I guess, because they are sort of largely sort of advertising-driven businesses, they can kind of create sort of AI products that can then help with both engagement on the consumer front, and also help with sort of advertising, basically like targeting and measurement on the sort of advertising or revenue generation front, which kind of allows these businesses to sort of monetize their AI investments, I suppose, a little bit easier and more upfront than some of the other monetization models that are available. So that is sort of why we sort of really liked Meta over the last year. We were sort of relatively early in our view that, Meta is actually one of the most obvious sort of near-term AI winners, even though, they don't talk about making these billion-dollar investments into sort of venture capital funded AI startups. They don't have a public cloud that they sort of sell AI services into. But really, like any kind of improvement that AI brings to both user engagement and to sort of on the advertising side, Meta is a direct beneficiary. And we've really sort of seen that with the revenue growth and the earnings growth that Meta has seen over the past sort of 12 months. The question becomes a bit more murky when Zuckerberg now comes out and says we're going to be spending $100 billion over the next few years on AI. I think if you're spending, billions of dollars, it's sort of easier to get a return on. But once you're spending $100 billion, that's sort of where I guess investors get a bit more uncomfortable. And even for us, seeing how they sort of earn a return on that kind of investment, I think you'd have to sort of look a few more years out and think about the potential sort of products that could sort of arise from that investment. And that, of course, is sort of, A, it's going to be down to different investors' opinions, and B, it's always going to be a bit of a challenge to sort of try and frame that.
Yeah, I mean, even for these tech giants, that is a huge amount of money to sink into an investment in, hopefully the future of the business, right? But there's no guarantees in this. So, I mean, you've touched on that a little bit, but I'd like to make it quite explicit. If we're looking at Meta as making most of its revenue from advertising, how do you see that revenue model changing and the areas for growth in both, the near future and maybe longer term?
Yeah, so great question, Francis. I think in the nearer term, I don't really see Meta's advertising model changing. Most of the revenue, or substantially all of the revenues, I think are going to continue coming from advertising. And I guess the growth essentially comes from adding new sort of ad surfaces or new apps. Now, we've seen, over the course of Meta's history, the transition from desktop to mobile newsfeed, and then launching Stories back in, I think, 2017 or 18, and then launching Reels a few years ago. And each of those sort of new product launches has resulted in a step change in revenue growth. So going forward, that's still one source of revenue growth on the advertising side, and then the other one would just be sort of more like improved ad products. So Advantage Plus, which is the family of advertising products on both Facebook and Instagram that are AI powered. That's been driving substantial growth for the business over the past few years by basically automating a lot of the ad creation and the targeting process, and delivering ultimately sort of better return on ad spend for advertisers than they could achieve on their own. So those are sort of the drivers for the advertising revenue side of things. I think going forward, Meta is trying to better monetize some of their messaging services. We've got sort of the new click-to-messenger ads, where basically, you run an ad and when a user clicks on it, it takes you over to Messenger so you can directly communicate with a potential customer. You've got sort of the click-to-WhatsApp ads as well. And potentially sort of more on the business advertising side of things, where I guess you wouldn't really see this in New Zealand or Australia or the US. But in in Latin America or in Asia Pacific, a lot of communication between like seller and buyer takes place, or seller and customer takes place over these kind of messaging apps. So that's another avenue of revenue for Meta as well, whereby you're sort of in terms of allowing businesses to message consumers directly, and whether that's done on a subscription basis or if it's done on a sort of similar ad bidding basis as well, remains to be seen. That's sort of the path for advertising. Now, in terms of, how do you monetize sort of all these AI investments that are sort of sitting outside of improving, ad product and platform engagement? I think that's a bit more open to debate, and I don't think like Meta or Mark himself really knows how they're going to monetize, because if you sort of listen to his calls, especially the first quarter earnings call, he sort of talks about the Meta playbook, which they've successfully deployed many times, whereby you sort of start with a product, you iterate on it and improve it, and then you sort of launch it at scale, and only once you've got billions of users using it do you sort of then turn towards monetization. And if you follow that sort of thread, well, all the other past products are basically platforms where you can run ads on, but of course AI is not a platform that you can easily run ads on. So there's a question of how they're going to do it. Mark doesn't sound like he knows. He's sort of talked about, potentially, we will monetize with ads somehow, or maybe we'll do subscription, which is sort of something that's already being done by a number of sort of consumer-facing AI businesses. But I think there's challenges to that as well.
Well, he's done very well in the past at innovation first and monetize second. So it'll be interesting to see if he does come up with something there. I mean, let's focus a little bit on their latest results, because they came out, what was it, 24th of April. Better than expected for the first quarter, still wasn't received all that well. Can you talk us through what happened with these results?
The Q1 results themselves, I think, were sort of in line at the revenue level, and then they beat expectations on the earnings level. But basically, if you then look at what they guided for Q2, the sales growth that they sort of expect, which is, I believe, 14 to 22% year over year, that actually came in at the midpoint worse than buy-side expectations. I think investors were sort of hoping to see a low 20s sort of growth rate. And that's especially important because as we progress through the year, in the second half of the year-over-year comparisons become a lot tougher because, second half of last year was when Facebook's growth really sort of came back. So in that sense, the guidance was somewhat disappointing, and that would have contributed to some of the negative reaction. But I think more broadly, and perhaps the biggest concern that investors now have is that, on the call, Mark Zuckerberg was talking about a return to sort of an investment phase. And that's probably triggering some painful memories of what happened, in 2022 when he spoke about investing heavily in the metaverse. Except this time it's, investing heavily in AI and tangentially in the metaverse as well. So I believe the full year sort of CapEx guide was raised by sort of from 30 to 35 billion up to I think it was 37 to 40 billion or something like that, which I think the market sort of more or less expected. But they also raised their full year operating expense guide by a few percent, which I don't think anyone saw. And in part, Meta sort of went through this year of efficiency last year, and I think many investors were hoping to see that year of efficiency continue beyond 12 months. But it seems like, we're sort of going back into an investment cycle again. And this time with a, relatively more uncertain payoff, because as we sort of have been discussing, if you're investing tens of billions of dollars a year into AI, and there's no sort of real obvious monetization path at the moment, I think it's right for all sort of investors to kind of question that.
Yeah, absolutely. I mean, always question for starters, but especially in that situation. I mean, they did give out their first ever dividend just this year. To me, that's a really interesting move. Do you think it signals a shift in Meta's business?
I think it certainly flags that they are more serious about sort of capital returns within their, I guess, capital allocation strategy. Instead of just relying on buybacks, and they do tens of billions of buybacks every year, like issuing a first dividend sort of says that this is going to be a permanent piece of our capital return. And, obviously most companies would hope to grow their dividend every year. Now the dividend yield is like, 40 or 50 basis points. So it's pretty immaterial from that front. But I guess that it's sending a signal that, hey, from a capital allocation perspective, we've sort of matured into the next stage of sort of being a public company. And there is actually potentially a benefit there, right? Because some groups of investors might only be able to invest in businesses that offer dividends. So that would have ruled out Meta previously, but now even with just a token dividend, that sort of opens up a new investor base. So there's sort of incremental benefits in that regard. But do I think Meta's going to be suddenly becoming a dividend aristocrat, paying 5 or 6% yields? I highly doubt that, because there's probably better things that they can spend their money on rather than a dividend. And you have to remember that in the US, like, dividends are basically double taxed, right? They don't have sort of the franking credit system that we have in Australia and New Zealand. So it is better from a capital allocation perspective, from a tax efficiency perspective, to rely more on buybacks than on a dividend.
They didn't really seem to signal that there was likely to be enormous dividends in the future, though, did they?
No, they didn't. And I guess if you look at sort of all the big tech companies that have been paying dividends, they're all pretty token amounts.
What about competitors? I mean, it feels like we can't really talk about the social network space without mentioning TikTok, right? TikTok is huge, surely seen as a bit of a threat, or even, emerging markets like India really looking at these sorts of different apps. What do you think? Are there threats to the Meta business model?
There was definitely threats that were perceived sort of back in 2022, which is, why the stock sold off so much. And that was sort of a combination of the ascendancy of TikTok and also, the actions that Apple took on the privacy front that sort of were in a way directly targeted at Meta, but obviously impacted the broader sort of ad ecosystem as a whole. So from a competitive standpoint, yeah, I think definitely, TikTok kind of ranks up there. But if we sort of look at what Meta is, I mean, social networks these days, that's sort of a bit of a misnomer now, because you've got essentially for Meta two networks that are sort of in play, right? You've got the true sort of social network, which is the social graph of all of your friends and acquaintances that are on there, and that forms sort of the core part of the network. But then you've got the content network, which is basically all the content that has been created by all the users on the platform. And TikTok, of course, is sort of the OG content platform. There's no sort of social network aspect to it at all. You basically there's an algorithm, and you just get recommended content across the entire platform based on sort of, what you click on, how you engage, and etc. And that sort of, when it first sort of gained in popularity, really sort of took Meta, maybe not by surprise, but it was certainly sort of orthogonal to their business, which is, we basically want to foster connectivity between people that and really sort of push the content across your sort of social graph. but obviously your social graph is going to be a few hundred or a few thousand participants versus, the 3 billion people that use Meta products every day. So having faced down that sort of threat in 2022, that was when sort of Mark decided to invest more heavily in AI for the recommendation part of things, so the deep learning recommendation systems, and basically get Meta onto becoming more of a content network as well. So I think the TikTok threat has, as of now, largely subsided. If you look at some of the sort of third-party app usage data that gets published, TikTok usage and engagement is actually sort of stalled or stagnated. So they are, I guess, no longer a growing threat. And of course, the murmurs in the US about sort of banning TikTok. Now, if that actually does happen, then, Meta is going to be one of the prime beneficiaries because, they will probably attract most of the time and attention that has been spent on TikTok. And I guess if we think about sort of competition more broadly, on sort of the AI front, it's interesting because last year, I think Mark was certainly content with building sort of good enough AI models to power sort of these whimsical kind of products that Facebook and Instagram have. But more recently, I think his sort of view has shifted towards, we now need to go out and build. Essentially, I think he said it right a quarter ago, where Meta has to go out and build AGI, so artificial general intelligence, and I think that then puts Meta into competition against a lot of the other sort of frontier model builders. So now Meta's in direct competition with OpenAI and Microsoft, in competition with Google, and then Anthropic and Amazon as well. So whether that's sort of a good thing or not, I mean, clearly it means they're going to be burning a lot more capital, and that's what they've essentially committed to. And in a sense, that kind of comes from, I think, Mark's view or very strong belief that he does not want to be beholden to any single hardware platform come the next sort of computing paradigm. Because, he's seen over the last few years how detrimental it is to be beholden to Apple, right? When Apple says we're going to remove the advertising identifiers, that basically sort of, killed a part of Meta's business, and I believe they said it was like a $10 billion revenue hit. So he doesn't want to go through that again. And it's become, I guess, more clear to everyone that the next computing sort of paradigm and computing form factor, regardless of what it is going to be very closely intertwined with AI. So that's why he has now sort of doubled down on, going out there and building the best models. And competing with sort of the best model makers out there, because he sees that as a maybe not an existential requirement for Meta, but certainly like super important to be able to control their own destiny going forward.
Yeah, we're basically running up on time here, but it feels like we can't have a conversation about Meta without talking about ethics. Mark Zuckerberg has testified before the US Congress several times recently about child exploitation. That's often also, there are questions around Instagram's impact on mental health. What are some big issues do you think that Meta might face? Do you think it could come up against things like government regulation or other legal challenges?
I think some of these challenges that you sort of, or issues that you mentioned, around mental health, child exploitation, etc. A lot of this sort of, I think, is not sort of necessarily platform specific, or it's not something that's a Meta specific issue, but it's more so just a combination of the internet plus sort of human nature, and this is kind of what you end up getting. And it just so happens that Meta is the platform that has been implicated in this. But I think if Meta didn't exist, I'm certain that there would be another platform that would be doing something very similar, and it wouldn't be a case of, if Meta didn't exist, none of these problems would exist. It would be, if Meta didn't exist, all of these problems would be either at another platform, or imagine if TikTok was the dominant social platform for Westerners, and that's controlled by one of the sort of strategic and geopolitical rivals in terms of China, right? So there's always going to be those kind of issues. And I guess it's just a way to say that the internet sort of always brings out the good and the bad in people, right? So, Zuckerberg, I think he sort of always sees the good in things, and he's, talking about sort of promoting connection and discovery and things like that. But obviously there's going to be negatives that come with that as well. But that's not to say, they don't address it, right? I mean, Meta spent billions of dollars on content moderation. I think they have something like over 40,000 content moderators that sort of look out for all this problematic material. And this is actually an area that I think generative AI could help a lot on. Because if you train an AI model to go out and scan all the content for anything that is flagged as problematic, then it's a lot more efficient than having humans do it. So we would probably, I certainly expect to see this kind of thing improve over time as we get more of a sort of AI-assisted content moderation.
Well, speaking of, there was also the issue where it went up against the Australian government and also Australian news producers. They have since said, Meta has since said it's going to stop paying for news in Australia. And this is a huge back and forth in terms of the relationship between news and platforms like Meta. Do you think that runs a risk of turning investor sentiment?
I would think that Meta, of all parties, knows best as to what the value of news is to the platform. They've got sort of the internal engagement data that shows sort of the engagement levels. And when Meta comes out and says, news is not something that people come to our platform specifically to consume, and is not something that is, valuable to our platform, certainly not to the extent that the news publishers claim. Partly that is a negotiating tactic, but I'm also inclined to sort of believe that as well, because again, they have the data, right? And if you just think about sort of how the average person uses like Instagram or Facebook, it's probably not to consume published news content. If there happens to be news in the feed as they're scrolling, maybe they'll click on it, but that's certainly not sort of the intent of the platform, right? So I think in that regard, the news publishers are in a tough spot, right? I think that, but this is not because of Meta or Google or anything like that. But I think again, it just comes down to sort of what the internet does to sort of industries that historically were largely gated by distribution or had their power from distribution. The internet basically comes in and says, well, distribution, the marginal cost of distribution is effectively zero, right? So for the news publishers, you can write an article and now instead of sort of publishing it physically to sort of a certain radius around where you're based, you can basically shoot that content out to the world and everyone can read it, which is great. But it also means that now you're competing with every other piece of content written in the world that is on the internet for attention. So I guess it kind of comes down to then publishing sort of compelling content that users are willing to, I guess, subscribe for and pay for, rather than sort of relying on the sort of aggregator platforms to send traffic in the direction of the publishers, which, again, is sort of challenging. But we have sort of seen successful implementations of that model, right? I mean, you look at sort of New York Times, they've built a very successful subscription-based business. Yeah, I mean, it's sort of a combination of quality sort of journalism and sticking to sort of the topics that your subscribers are interested in and sort of not necessarily veering too far off course there. So, ultimately, maybe Facebook or Meta does sort of bring news back onto the platform and does pay the Israeli publishers for that news. But I suspect that'll be more of a sort of political settlement rather than Meta admitting and a reflection of the value of news to Meta itself.
What potential do you see in this company for investors to be keeping an eye on?
Now, because Meta still has, 3 billion and growing number of people that are using its apps every day, it basically controls a huge quantum of what is essentially the most scarce resource on the internet, which is attention. And that attention is valuable. That attention can be monetized. So that would be the sort of status quo with the advertising business. If Meta can develop, say, some kind of personal assistant that has, persistent memory, is an agent, so it's capable of doing things for you, and also the sort of hardware to interact or interface with that assistant, then that could be a very sort of compelling opportunity. And then, further down the line, if we do get to some sort of metaverse, augmented / virtual reality world, the groundwork that Meta is laying, I think, is giving it a good chance of having a very strong position there as well. And of course, if you control the hardware platform and the software as well, we've seen what Apple has done with that control over the iPhone, right? And that's been tremendously valuable for them.
It is a fascinating area, and like you say, a lot going on in one business. Thank you so much for joining us, Daniel, and walking us through all of that. And thank you very much to everyone who tuned in. You can watch Shared Lunch on YouTube or follow the podcast on Apple, Spotify, wherever you get your podcasts. Do leave us a rating and a comment about what you'd like to hear about next. Now, before you go, we do have a special offer for Sharesies investors from BusinessDesk. If you use the promo code SharedLunch2024, you'll get $100 off an annual subscription to BusinessDesk, which is usually $249, including GST. The offer does only apply to new BusinessDesk subscribers, can only be used once per subscriber, and can't be used with any other discounts. Enjoy the rest of your week.